What is the debasement trade? If you've been watching gold prices shoot up or Bitcoin making another comeback, this might be why. Stick around because I'm going to break it down super simple. What is it? How you might want to think about positioning yourself, and honestly, does it even make sense in today's crazy economy? We'll jump straight in. First off, what is the debasement trade? Think about this. Governments around the world, especially in the US, have been spending like there's no tomorrow. We're talking trillions in debt, stimulus packages, and you name it. And to keep things afloat, central banks like the Fed crank up the money printer. That's debasement in a nutshell. It's when the value of your dollar or any fiat currency around the planet, and many governments have actually engaged in this, gets watered down because there's so much of it floating around. Inflation kicks in, your savings buy less stuff, and suddenly that coffee costs an arm and a leg. And it's something that I think many people around the world are currently feeling, the hit of inflation ever since COVID after the mass printing that was done by central banks. The debasing trade is basically investors saying, you know what, screw that. I'm not holding on to cash or government bonds that could lose value. Instead, they're piling into assets that historically hold up when currencies get debased. Think gold, silver, Bitcoin, even commodities like oil or real estate. It's like hedging against the system itself. Now, it's not just some weird or fringe theory. Big players like hedge funds are all over it, betting that election drama, policy fights, tariffs, uncertainty, wars around the world. But governments won't stop the spending spree anytime soon. Tech ties in here because crypto is basically designed as a digital gold to fight this exact problem. Politics, well, fiscal policies from both sides are fueling the fire. Deficits are ballooning no matter who's in charge. Now, how do you position for it? Now, I'm not a financial advisor. This is an advice. Do your own homework, talk to a pro, all that jazz so it doesn't get me sued. But if you're buying into this idea, the play is to diversify away from stuff tied to the dollar's strength. Start with classics like gold, silver. You can grab physical bars, ETFs, GLD, or mining stocks if you want to really ramp up the risk reward. Bitcoin and other cryptos are huge in this trade. It's why we've seen such a massive rally in Bitcoin, even when some of the stocks in the beginning of the year they dipped. But some of the stocks, specifically the larger ones in the AI space, seem to be doing really well. So if you're looking at companies like Google, and we can do a whole video on Google with what's happening with Waymo, what's it's doing with the AI cloud, which is doing fantastic by the way. That's a different video. But the truth is, looking at things that are scarce, things that there is some form of scarcity. So equities doesn't quite fall into that, but commodities do, because they can't be printed endlessly. So have a look at some of the cryptos. Ideally, you'd want to go for the Bitcoins, the Ethereums, etc. You can start with the classics: gold, silver, grab physical bars, ETFs like GLD, or mining stocks if you want to ramp up this pressure, the risk reward. You've got Bitcoin and other cryptos, and these are huge in this trade. And it's why we've seen such a huge rally in the Bitcoin over the last year, because it's scarce. It can't be printed endlessly like fiat. You can throw in things like Ethereum or even certain types of tech stocks that might have a specific moat, like Google with its Waymo and how great it's doing there, its AI clouds, or ASML in the Netherlands, because they're basically a commodity themselves. Commodities are another angle. Oil, copper, that's essential and inflation proof. Real estate, if you can afford it, if you can bank in lower interest rates right now and secure them for a 30-year period, then possibly real estate, and it's a good hedge against inflation over the long term. You might want to lighten up on government bonds or just holding cash. That's not a great idea in a situation like this because these could get hammered if yields spike or the dollar weakens. Timing matters too. Watch for signals like rising deficits again, Fed hints at more QE or rate cuts, which we're hearing and we're seeing, and Trump is going to possibly replace the Fed chair next year with the aim of actually lowering interest rates further. Leave a comment below if you've heard of the debasement trade, what you're doing, what actions you're taking related to a similar strategy, such as moving your cash or your assets to inflation fighting products.